So let's understand what happened with IndusInd Bank. So IndusInd Bank has recently reported a 2100 crore loss related to foreign currency derivatives. So here is what has actually happened at the bank. Let's understand. Let's try to be clear and fair, and understand from the bank's point of view what has actually happened. So like many banks, IndusInd Bank also used to trade in derivatives to hedge against foreign currency risk. These are standard standard procedure followed by all the banks. Let's say Axis Bank follows, HDFC Bank follows, and all the other banks follow to protect against the volatility of the exchange risk or the foreign currency risk. So derivatives is used as a risk management tools, right? So but there was a gap. Now let's come to the point. So there was a gap in the internal hedging trades that were recorded. So the profits were shown on the profit and loss account, but the losses of the from the hedging was shown from the derivative hedging was shown in the balance sheet. So they were hidden in the balance sheet. So this is an accounting mismatch that has happened at IndusInd Bank. So there was a massive mismatch, and this mismatch was happening from a the bank has said that this mismatch, and the RBI has also said this mismatch has been happening for past few years. That has now come into the picture. When this came to light, the bank corrected its books, leading to a 2100 crore charge, and a 50% decline from the all time high of the bank. All time share price would be all time high of the share would be approximately 2000 in 2018, but now the stock is trading at around 830, 838 as we speak, and stock is almost down 50-60% from its previous highs. And the major thing, when the senior management has to come together, and because it's their baby, they have nurtured the baby, they have grown their baby, right? But when there is a problem with their baby, say IndusInd Bank is a baby of their management, so now the CEO and the deputy CEO have, stepped down, taking the moral responsibility that there has been some mismatch, but they have resigned rather than at the time, when their company requires their support, they have actually resigned. So there is a clear requirement of audit, and which RBI has already announced, and a temporary leadership team has also been assigned by RBI to manage day-to-day affairs. So obviously this actually, we don't know, is a case of fraud, but we will say this is definitely a case of governance lapse in how risks were accounted. So transparency in financial reporting matters. So maybe let's